So this is the weekly review of the last week of May. So we have here the Eurusd. Here is the weekly open, okay, at Sunday 5 p.m. and these dotted lines are the midnight open. This is the line of separations of days: midnight open, okay. So this is Monday, Tuesday, Wednesday, Thursday and Friday. So now we're gonna add some annotations here, and we're gonna do this every week so you can know how to manage your trades in life situation. So now here the overall scenario is dollar going higher and euro going lower, so we need to trade to this from here to here. Okay, that was the buys here. So as we see here, we don't trade Monday. Okay, this is untradeable for me in my strategy, and we trade Tuesday, Wednesday and Thursday, and we don't trade Friday. Not every week we don't trade Friday, sometimes we trade Friday. Okay, this is a no-no trade, and this is no trading days here. So as we see here, we have a gap. Okay, we open in the gap, and this is the 50% of that gap. Let's make it this way. Okay, so in order to go here first, we need to fill this gap at least to 50%. Okay, so here, zoom in. This is the hourly chart. This is Tuesday. So we have the bias saying we need to trade here, then go here. So the trade of this day was, obviously we are here in London, we opened, we went high, okay, take Asian low here, and we are going higher, okay, to take some highs and reverse. So we just need to wait for the reversal, okay, and here at 5 a.m, 6, 7, okay, this is 8 a.m. So the reversal happened in the open of New York Eurozone, made this change in state of delivery, okay, and the entry is here, of course, like a little bit at the midnight open, and the stop is right here, targeting this, okay, to all. So this is the trade of Tuesday, and here we need to reverse, like actually reverse. This didn't happen, okay, so this bias was obviously telling us that Wednesday we need to trade to this fair value gap, at least to these highs, okay. So we opened at midnight, consolidation, manipulation, distribution, okay. So our bias was bullish, okay, so we need to add some annotation. Okay, let's take this off. We have this fair value gap being respected, and we have this, okay, let's make it gray, and we have this more block here. So in order to take these highs here, okay, we need to go lower then go higher, okay. So we measure the dealing range here, and we have this 50%, so we need to trade, have a reversal from here and going on, okay. So as we see here, okay, this is 2 a.m. we had consolidation right here, okay, this is the consolidation here, and we reverse. In this situation we need to go in the lower time frame to see the entry. How is it here? So then we took the highs, we had a reversal, okay, so here you could trade in the 15 minutes the reversal, and in Thursday was a bit awkward, okay, because I had a bias, like a bearish bias toward here, these lows, and that didn't happen, okay. So at the open we went in the retracement or reversal, we don't know, okay, but here we had a reversal. Okay, this is the fair value gap, and this is the order block. So we disrespected the fair value gap. Now it became inversion fair value gap, and here we closed above this order block, so we disrespected two strong PD arrays in 1 hour time frame. That means a reversal, so we are trading right here. So we wait, let's discard this and make it this. Okay. So if you take like 1 shot 1 kill, that would be your trade. Okay, take 2.8 R and be content with it. So we wait for London session. Okay, so because we had a reversal, so we have no retracement, so we wait for retracement, then continuation in the New York session. Okay, so this is 7 AM here. We need to dive deeper in a lower time frame, so now this. So the first target is this high, okay, and the fair value gap. And here, when you can trade Friday, because the remain target is still open. So at Friday we visited the weekly open, then we reversed here, so we have a fair value gap here somewhere. So as we see here, we are in this order block. Okay, so here you could take an entry. Okay, you can target this high or this high, but you can have like an entry in a lower time frame here, because this is 2 AM and we have like this pullback here, so you could just simply take a trade. And we go here. Here you can't take a trade, like definitely you can't, because this is the change in state of delivery here, and this is the candle closure, so you can't just take a trade like this. Okay, that's a bit dull. I actually took a loss here, because like obviously where I did, maybe I entered here, I don't remember exactly. Yeah, I put my stop here below this candle, so I got stopped. My target was this 2R, yeah, this high. I don't take like to the high of high, like I take this here a bit slower. Who knows? You don't know. Like here we didn't trade to that fair gap, and we reversed, then we reversed again, so I took a stop here. And if I wanted a lower time frame trade, I would show you how I would do it, because I felt like kind of I didn't know why I didn't took a trade in 5-minute time frame, or I don't remember that. So we go to Thursday. Okay, so as we said here, we have 1 fair value gap, 2, 3, we disrespect them all. We respected the bullish video raise 1, this is 2, you can take trade here. Okay, and if you did took a trade here, you just put your stop right here, because you can't disrespect 1, 2, 3. Okay, so if you took this trade here, you would be stopped like this here. This is change state of delivery here, and you take it like that, you get stopped. Okay, fucker. The recording was stopped, I don't know why, so I'm gonna repeat myself again. In this 30 minutes time frame, we have this range here. Okay, and this is the half upper of that range. So at this time it's 4:30, so we wait for New York session. Okay, and we took a low here before New York session here. I don't know why it's stopping, like pausing the recording itself. So we have this, the change in states of delivery in New York session here, 7:45. We put our stop here because this is the protected low. Okay, we took this low and reversed, so we took liquidity here. And our target is so obvious, like we take 2R. 2R is the ideal you can take. I'm against like taking it to this high and being like really being professional and say I took a trade from the bottom, I did that. I don't do this. Okay, I take like the maximum for me is here. Okay, and this is 2.3, so I take it a little bit below 2.25. That's the maximum I can take, because I don't trust the market. Like here we get stopped, we get manipulated, we reverse, so you don't know what the market is going to do, so just take 2R and be content. And here it's Friday, so we took this low liquidity, and this low was below, was above, like was the creation of the 4-hour fair value gap. So basically the 4-hour fair value gap would be like here. Okay, so the 4-hour fair value gap in Friday, we traded to it. Okay, so we wait the price to go below the midnight to trade higher. And we have here the change in state of delivery, and we have this entry here. We are trading Friday because it's open target. Okay, you can put your stop here or here, doesn't matter. We have this open target, so it basically gave us a 2R. That's great. And if you can wait for a retest here, put your limits order above, just a bit above the change in state, and you can simply target a 2R here to become like really not paranoid about it. So this is the equal highs. They can give you 1.7 here. You can take 1.7, it's okay, and you can take 2R. So there is no trade here. We are at 5 minutes, we are in Wednesday, so basically there is no trade. Maybe I would take this trade here, but that would be so risky. Okay, that's why I didn't take it. Anyway, this is the weekly review of the last week of May, and stay tuned for the weekly outlook tomorrow for the next week. See you soon.